Hello, everybody. Welcome to our Introduction to Accounting Part 5, how to record assets, liabilities, and owner's equity. So when we're going through and recording transactions, remember, right now we're doing our December 31st accounting party. We're going to do all of our transactions on this one date, and this is because we want to learn how to go through and how do we record an asset, how do we record a liability, and how do we record owner's equity. Remember that when we get here, as of right now, T accounts are going to be so important. So let's learn how we go through and do this. So when we're using T accounts, what I want us to remember is when we're going through and doing this is the T account. And the way that I'm going to use the T account is I'm going to start with my balance sheet equation. We're going to say assets are equal to our liabilities plus our owner's equity. Okay, so this is what our balance sheet equation is. The middle of this right over here is really where our T is going to be going. So this is going to go assets on the left, liabilities and equity on the right. What I'm going to do on top of this right over here is I'm going to say, what is our nation's capital where crazy stuff gets done? It's Washington, D.C. But in accounting, what we're going to be doing is we're going to say this is going to be debit, credit. If you're a metal fan, AC, DC, right? Whatever floats your boat. Now, what exactly does this mean? Okay, what does this mean to us over here from a recording standpoint? Let's start over here by isolating our assets. So assets are on the left. And so what does this mean? Assets will typically have debit balances. Assets will be increased with debits. And at the same time over here, assets will be decreased with credits. So if we're giving somebody cash and cash is an asset, our cash would be credited. Now, let's look at the other side of the equation right over here. So over here, I have our liabilities plus our owner's equity. Liabilities and owner's equity are on the right-hand side of the equation or under the credit side. Liabilities and owner's equity will typically have credit balances. Liabilities and owner's equity are increased with credits, and our liabilities plus owner's equity are decreased with debits. So whenever we're going through and recording a transaction, right, this always has to make sense, right? So over here, if I'm getting an asset, if I'm receiving cash, I'm going to go ahead and debit cash because cash is an asset, right? I'm going to increase that asset with a debit. If I'm paying cash for a service or if I'm paying cash to buy equipment, I'm going to show that cash going down because it's leaving my pocket. So I'm going to be crediting cash. The other part of when we're going through and recording transactions, my total debits have to equal my total credits. If they don't equal, I'm in trouble. But in any event, and we're going to go through and record some transactions very shortly, kids, right over here, what we're going to go ahead and do is I'm going to say goodbye. Like the Ouija board, right? We always want to say goodbye. We never want to play in a graveyard and never play alone. So we always say goodbye. In any event, thank you. Please feel free to leave your questions below. Appreciate your liking and subscribing, and I look forward to seeing you on the next video. Have a great day.